All right, hello everyone. Welcome to the Green Room. This is your host, Amrita Vir. We're here today speaking with Payal Patel. We're supported by APIX and Brankas, and as usual, we're going to, speak to Payal about her journey in FinTech in Asia. And her 15 years of compliance experience, and we're going to really drill down into crypto and financial crime. So as usual, before we dig into Payal, we're going to hear from Todd Schweitzer, the CEO and founder of Brankas. He's also the community manager for APIX. They're both our sponsors. So we'll hear from him in just a few minutes. Then we will talk to Payal about all of her work in financial crime and crypto compliance. And we'll save the last few minutes for your questions. Thanks to those that have already submitted before during registration. Feel free to send them in along the way during the webinar, and then of course we'll save a few minutes at the end. And with that, I'm going to turn it over to Todd to talk a little bit about APIX. Todd, over to you.
Cool. Thanks, Amrita. Thanks, Payal. Hi, my name is Todd Schweitzer. I'm the CEO and co-founder of Brankas. We're an open banking technology company operating across Southeast Asia. And we are also honored to be members of the advisory council for APIX. And so I want to just share a couple minutes on what APIX is and how it can benefit you in the audience. So big picture, APIX is an initiative from some of the key institutions in Southeast Asia that are driving financial technology development and FinTech partnerships, right? So the founding members are the ASEAN Bankers Association, the IFC, and the Monetary Authority of Singapore, the financial services regulator. And there's a number of founding members and advisory council members who all have an interest in financial services technology, right? And Brankas really represents the voice of kind of the FinTech startup community, if you will. The point, next slide, please. So what APIX is doing is meant to bring together financial institutions on one side and FinTechs on the other, and break down the walls that slow down or hinder or otherwise make it near impossible sometimes for FIs and FinTechs to build new products together, right? And I say this as a FinTech, having worked with many banks over the years. The typical process is you're going through compliance hurdles, IT security hurdles, infrastructure hurdles, legal hurdles, just to get to a point where you can do a demo or a POC that's making use of, or that's relevant to the bank, right? So what APIX is, it's a platform for collaboration between FIs and FinTechs, and APIX provides all the tools you need inside the apixplatform.com that allows for FIs and FinTechs to develop proof of concepts, demos, test products together. If you're a FinTech, it also gives you an opportunity to actually get exposure and get yourself recognized by potential FI partners or FIs as potential clients of yours, right? So there's an API directory and a solution showcase where FinTechs can actually showcase their solutions and get recognized by FIs. Next slide. So the other thing I want to mention is the Hack Coliseum, which is a cute name for what is effectively a create your own hackathon content management system. And it's basically a system that enables any organization to host an end-to-end hackathon or tech sprint or whatever you want to call it on APIX, right? So what this means is there's administrator workflow, you have the cloud infrastructure ready to go, there is a workflow for solution submission, for judging, for actually running the solutions, right? This is all very different from your typical hackathon, which is emailing files back and forth or uploading to some Dropbox link, right? So as an example, right now, and for those who are FinTechs on the call, you can go to TimeBank and Prudential, both of which have their first round of solutions or of registration open right now. Actually, TimeBank closes the first registration deadline is today, and Prudential just kicked off on Monday, I believe. But these are cash prizes for very specific problems that TimeBank and Prudential respectively are looking to solve. And in addition to the cash prize, of course, there's a possibility of working commercially with those institutions if the problem set goes live. For those in the audience who are representing either financial institutions, financial fintech associations, even regulators, there's a number of different organizations who have hosted these hackathons, and I have to say they've been really, really successful. And it's really encouraging, and it makes it very, very simple for an organization to very quickly spin up an innovation challenge of their own. So if that's interesting to you, talk to us at apixplatform.com. Happy to have a chat about that. Moving forward. I think I'll stop here. So in addition to the hackathon platform for FinTechs, there are a number of grant and funding opportunities available. So there's APIX Cares, which is an ongoing program for FinTechs that includes access to APIX, insurance top-up, cloud credits. And then there are specific grants and actually VC funding that is available for FinTechs on APIX. And you can find out more about that at amtdsolidarity.asia. So that's just quick overview for those in the audience who that are interested in doing this. Otherwise, APIX is very proud and and grateful to be supporting the Green Room. And Amrita and Payal, over back to you. That's all from my side.
Thank you, Todd, and again, a big thank you to Brankas and APIX for supporting us. So with that, I'm super excited to introduce our guest, Payal Patel. She is founder of P Squared Financial Crime Consultancy and is now the MD for APIC at FinTRAIL. Payal, thank you so much for being with us today.
Thank you so much for inviting me. I am super excited to be talking to you and sort of, I guess, reliving my career journey. Sometimes it's quite nice, especially during these weird times, to sort of take stock of everything that's happened and where we are and what the future hopefully looks like.
Absolutely. Well, I think something, in just, researching your career and how you got to where you are today, to me, it seems like you've made a series of really intentional shifts. And so I'm curious if you could talk us through those and your thought process. Maybe we can start back in the UK, if everyone can tell from Payal's accent. She started her journey in the UK. And there you actually started very early shifting from legal to compliance. And I think especially in financial crime. So how did you think about that shift?
I mean, I wish it was as intentional as you've described and as how I like to sometimes tell it. But I think I was really interested in practicing law, learning about the law. I have to be honest, I think a lot of that came through watching things like Ally McBeal. I think I had this really glamorized view of what it was going to be like. And I loved it as an undergrad. I really enjoyed sort of learning through the cases and sort of formulating, thoughts around how you would defend a particular case or a specific scenario. In the UK, you then do a year sort of training. So it's a year-long course. I did that in Oxford for a year. And I loved the experience of studying in Oxford. So I did my undergrad in London, and it's quite different studying in a city that isn't a specific student town per se. So I really enjoyed sort of moving out to Oxford and studying there. But I think during that time, what I realized is actually practicing law, especially in corporate space, wasn't really what I thought it was going to be. And there was a lot of sort of contractual drafting. It was a lot more sort of procedural than I'd anticipated. And so I decided I was going to defer my training contract with Clifford Chance, and I was going to paralegal for a bit and then go and spend 6 months in California, actually, was the plan. And I started paralegaling, and a lot of my friends were working in banking. And there was a real drive at that point to bring people that had a legal background into compliance. It was post 9/11. There were sort of some thoughts around, well, how are we going to bring in sort of fresh eyes into this space to really think about how are we going to build and interpret regulations and translate those into sort of robust compliance programs in order to allow our businesses to grow and scale. So I sort of fell into compliance. My first role was at Credit Suisse, where I sort of did your more traditional advisory roles. And sort of that was my first foray. I then sort of moved through a couple of banks doing your more traditional advisory roles. But my last role in the UK is really where I think I found my niche and my love for compliance, which was essentially working in the business and with the business, but in a compliance capacity. So essentially, I reported directly into the regional head of cash and trade, and I worked on their mobile payments initiatives in Africa. And that gave me a real sense of, okay, how can you position compliance as being business enabling? How can you work directly with the business to really think about risk, but also think about, what are the types of services that we want to offer underbanked individuals? How do we want to move into new markets? What kind of dialogue do we need to be having with regulators around controls that we have in place? How do we launch new products? So really working cross-functionally. And it really gave me an opportunity to learn sort of how do we develop products? What are the regulators' concerns? What do we need when we work with data scientists in order to analyze the information of the use of the platform? So it really gave me that kind of breadth of exposure that I hadn't experienced before. And so from there, all the roles that I've chosen to occupy are those where I've really got to work alongside the business, but really sort of build and capitalize on the compliance experience that I've built over the years.
Yeah, got it. That makes a ton of sense. You get to see like a full picture in compliance. There's the second shift I actually want to talk about is actually you shifting from Europe, UK, to Asia. You moved to Hong Kong, I think it was in 2012. So tell us how you decided to move across the world, and as someone who made that decision, about a year ago myself, and what parallels there are.
Yeah, I mean, again, I think both my husband and I met at university. We'd lived in London our whole lives. We'd traveled a lot, but we hadn't relocated. And one day I just sort of said, what would be interesting? It'd be fun if we just moved. And so my husband sort of, it's not uncommon for me to come up with these radical ideas every now and again. And so I think he didn't think too much of it, but I think he sort of said, well, look, let's just make a really loose plan, which is we'll give ourselves the year to make the shift, and whoever gets the job first, both of us will go. And that was the commitment. And I don't think either of us actually thought this would actually happen. And at the time, I sort of had some discussions with Citibank, and there was an opportunity out in the US. But I think both of us were really interested in Asia, mainly because the region is so attractive from a traveling perspective. Also, the opportunity to immerse ourselves in a new culture, a new environment was really appealing. And so, I just started putting a lot of feelers out in Hong Kong mainly. And I think we made the plan in sort of January to give ourselves the year. And in November, so literally at the 11th hour, I got the call from JP Morgan that there was an opportunity and that they wanted to make me an offer. And we literally gave ourselves a few months, packed our suitcases and moved out. And we've been in Asia now for 9 years. It's been incredible. But I mean, I think it was one of those, let's just take the opportunity to see what happens. I'm not sure if this is also the case for you, but I think a lot of people come out with sort of a 2-year plan, which is kind of what we did. But there's so much to do, and we've loved so much about it. And now, 2 years just in hindsight just wasn't enough for us. And we've just, now we've got children here, and my parents now live here. So it definitely feels like we've established roots here in Asia for sure.
Got it. Yeah, no, that I think there are a lot of parallels I see. But that's great. Glad Singapore is lucky to have you out here. So we've talked about the shift from legal to compliance. We've talked about the shift from UK to Asia. I think the last big shift that I see is when you went from banking to banking compliance, actually to FinTech compliance, and doing much more a deeper focus on tech, especially in Asia. So can you tell us about that shift as well?
Yeah, so when I was at Standard Chartered, I headed up their correspondent banking program across Asia and the Middle East. So that meant that I went out and I met with Standard Chartered's clients, which included FinTechs, but primarily banks and NBFIs. And it really gave me a sense of sort of, different styles of institutions, different products and services. And I really felt like the FinTech space was an area where, for me, was very new and exciting, an area that I hadn't worked in before, and an area where I felt like there's really a material learning trajectory for me, not only in terms of working style and culture, but also in terms of the ways in which you apply and think about compliance. And so I started thinking about, where would I want to move? And I was on maternity leave, and I sort of thought, well, rather than make the jump into a tech company, what I'd much rather do is take a bit of time and maybe build up my skill set, knowledge, and practical experience in the space. So I set up my own consultancy to get as much exposure across the FinTech ecosystem as possible. And at the time, my focus was very much on working with FinTechs that wanted to establish banking partnerships. So really trying to double down on the currency that I brought, which was sort of all my banking and regulatory experience, but really sort of working and learning from sort of how the FinTechs operate, what their products and services are, what that means from a regulatory perspective, and translating that dialogue back in order to secure those banking partnerships and or regulatory licenses.
Got it. Yeah. Thank you for talking us through that. And P Squared has subsequently been absorbed by FinTRAIL.
That's right.
Can you tell us a little about what FinTRAIL does?
Yeah, so it's really serendipitous how I sort of met with the founders of FinTRAIL. So I'd set up my consultancy, and I was really looking to sort of build a community of compliance officers that worked in FinTech. So you very much have this in banks. You have these organizations and networks that meet and they share experience and learnings. I didn't really feel like you had that in the tech space, at least not in Singapore. So I was sort of doing some Googling, and I came across the FinTech FinCrime Exchange, which is a network that is managed by FinTRAIL, which brings together the compliance world and the sharing of knowledge through periodic meetups, etc. So I reached out to one of the co-founders and said, look, I think this is great. I would love to head up your Asia chapter, and collaborate and work together. And it was very clear from the outset that we were very aligned in terms of our approach and philosophy around compliance and financial crime. FinTRAIL also focuses on FinTech, which is something that I was very interested in terms of focusing on. So very quickly, it became clear that there were obvious synergies there, and that a collaboration would be something that would work really well for both of us. So yeah, I joined the team at FinTRAIL. I now head up their business here in Asia. We work with financial institutions across a range of products and services, from startup to scale up, and across the region on all aspects of their compliance program.
That's amazing, Payal. I think being able to start something, but then also seeing like the areas of synergy, and to be able to kind of put all of those like good pieces together and work together to create something even better is really amazing. So kudos to you.
Thank you. I mean,
that opportunity.
Yeah, I mean, it is a decision that I didn't take lightly. I mean, I think when you start your own business, it's your baby, and you have ultimate control and ownership over every aspect of it, and that's great in some ways. In other ways, it has real challenges. I really think when you find a partner that really at its core aligns with sort of what your vision is and what your ultimate sort of aspirations are, how you like to work. And, for me, the team at FinTRAIL is what I love, like the expertise that they bring, but also we are like a little family. And I really enjoy sort of, working in teams where there's real sort of, there's really strong relationships and sharing of expertise across the organization, which means that, the way in which we operate is very much as a global team with a regional presence. So I still feel empowered to run the business here in the region as I would have had I still sort of operated P squared. But ultimately, I leverage this depth of expertise that we have across the globe, from having worked with clients from across the globe, and that for me is invaluable and something that I feel I wouldn't have been able to do in isolation for quite some time.
Yeah, absolutely, absolutely. Well, now I actually do want to dig into the financial crime work that you do. Maybe before we get into the work, for the folks on the webinar that maybe don't have as much of a background in financial crime, can you just tell us, like, what is financial crime? It's not, I know some people may just think it's like phishing emails or online scams, but really, what is financial crime and why is compliance so important in fighting it?
Yeah, so financial crime can take many forms. I think typically at its highest level, we talk about money laundering, which is essentially the processing of illegitimate funds and using those illegitimate gains for criminal activity and sort of processing those funds, and then terrorist financing. And I guess the main reason sort of it's an area that I love working in. I often get asked this question, sort of, why compliance? I think it has a bit of a bad rep for being boring, although I don't find it particularly boring. I think people often forget the social impact of money laundering and terrorist financing. I mean, ultimately, it costs us all. So serious crime, from drugs and cybercrime to people trafficking, has huge negative impacts on society and the people affected, as well as costing the economy billions each year. And ultimately, the trickle-down effect of that is that taxes need to be raised to compensate not only for the financial loss, but also the additional resource required to police the activity going forward. The price of consumer services increases as businesses seek to cover the costs associated with the higher taxes. Incidents of corruption, violent crimes, and job losses go up, and all of this can ultimately destabilize companies, industries, and even developing nations. So also for the victims of crimes enabled by laundered money, the effects can be devastating and lifelong, including great personal family loss. And so I see my role as preventing the criminal activity at a crucial point where criminals seek to convert clean their money by concealing it within the financial system, essentially allowing the crime to pay off.
Got it. Yeah, thank you. I think it's really hard just to look at it on paper and be like, financial crime, what does that mean? It's really helpful to give those kind of real world implications.
Just one other thing while I think about it. I think, something that at FinTRAC we really try and focus on, and particularly I think it's important in this region, is this idea of moving away from simply seeing financial crime and compliance as a tick box exercise. The regulator needs us to do it, so we'll do it. It's really thinking more broadly about the socioeconomic implications of why we're doing this, and thinking beyond simply just regulatory requirements, really trying to interpret, well, what's the essence of the risk that these regulations are trying to address, and how do we apply them to our business model? And so I definitely see that thought process and that application of a risk-based approach manifest itself in Europe and the US. I see more in Asia, where the fintech ecosystem is a bit greener and still evolving, that we haven't quite got there yet, but we're getting there. And it's very much sort of that type of message that I try to push, and it's very much a pillar of sort of how FinTRAC tries to approach compliance and financial crime.
Yeah, actually, Paul, I want to dig into that a little bit more. You mentioned there are differences in the way we think about financial crime and compliance in maybe Western economies versus Asia. Can you maybe describe those a little bit more? And even within Asia, where do you see some of the biggest differences?
So I think one of the key challenges in this region, but equally what makes it super exciting to be working here, is the fragmented nature of the region. So depending on how many countries you decide to bucket within the APAC region, you're talking about 15 different markets, different regulatory requirements, language barriers, etc. Essentially, each each new market should be treated as a new business in and of itself. What works in one market might not in another. The regulatory requirements within those markets are different. Really trying to have some of those nuanced discussions with regulators around interpreting regulations and applying them to unique and bespoke business models within those markets also requires, a specific and unique skill set that might only exist within that market. So when I hear of companies sort of basing themselves in Singapore and talking about scaling across the region, I think a lot of them really underestimate the challenges associated with that. And from a compliance perspective, what we often see happen is that you have sort of compliance expertise that is housed and HQ'd in, say, Singapore or Hong Kong, but then what you definitely need is that in-country expertise that can drive some of those more bespoke country-specific dialogue around sort of, what are the unique typologies that we're seeing in this market? What are the new emerging regulatory requirements that apply to our business? And really having a seamless way in which communication can so that the business can remain agile and can continue to adapt and be responsive to those localized requirements. I see it being quite different in Europe, where you benefit from passporting. So essentially you can set yourself up in one market and then, benefit from exploring the region effectively.
Yeah, no, that makes a lot of sense. I guess there's also this other interesting piece of Asia where the regulation is very different across markets. And some markets, I would say like Singapore, are very developed in how they think about, financial crime. But many of the other countries in the region may be less, the regulators are less savvy about it. How do you manage, I don't know if it's the relations with the regulators or the companies that you work with, to make sure that, the financial criminals aren't getting their way, even if the regulatory regime doesn't necessarily help to mitigate it?
Yeah, it's a really good question. So I would say, for me, the key is about open, honest and transparent dialogue. And in that regard, I feel like those that work in the fintech space have a real obligation in terms of handholding regulators to really ensure that they understand the products and services that are being created. And so they have a really robust understanding of what are the risks associated with their specific business model, and that they're able to talk to that in detail. So it's important to remember that regulators aren't just concerned with your business in isolation. They're also concerned with, well, what's the risk exposure here to the ecosystem as a whole? And I think really thinking about, okay, well, what risk do we have? How are we looking to mitigate those risks? And what is our next sort of 12 to 18 month plan, and how are we thinking forward in terms of building a compliance program and a financial crime program within that really ensures that we are putting in proportionate and pragmatic controls that allow the business to grow and scale and allows us to continue to innovate and be competitive, but also mitigates our risk exposure. And having that dialogue with the regulators on an ongoing basis, really talking to them about, we've self-identified these issues and here's what we've done about it. I think, companies often feel worried about going to regulators and saying, well, we've identified an issue, when in actual fact, my experience has been that regulators feel quite comfortable with an entity that is self-identifying issues, because the view is that organization has the expertise to be able to identify material risk exposure before a regulator or an independent audit, and they've got a plan around how they're going to address that. So yeah, it's really about sort of having that ongoing dialogue and really sort of making sure that you can interpret the regulations as they apply to your business model.
Got it. It's almost like being proactive and preempting the regulation in cases where it's not there.
Absolutely. And I also think there's an opportunity here to really sort of, as part of this dialogue, have the regulator start thinking about or thinking and planning around future regulatory prioritization. What are some of the practical constraints around applying this regulation? In Singapore, we hear the regulators talk a lot about wanting to make this the fintech hub for Asia. Well, in order for that to be the case, you really need to have a regulatory framework that strikes that balance between innovation and balancing risk. And the way in which you do that, I think, is to have this ongoing discussion which says, well, look, these are some of the challenges we have in terms of interpreting these regulations and applying them. This is how it's this is how this application is commercially challenging us, but this is where we think the risk is, and this is how we're looking to mitigate that risk. So how can we think about future regulatory updates in this space to ensure that it allows us, like I said, to continue to develop and innovate, but at the same time that we've got this control framework in place.
Got it. One other area I kind of want us to think about is, I mean, you worked in banks and now you're working with fintechs. Are there different risks, financial crime risks, for banks versus fintechs, and how do you think about them differently from a compliance perspective?
Yeah, so I think with fintechs, the main risk comes from the fact that everything's done remotely. So onboarding is remote. You have, the speed at which customers want to be onboarded and start using your products is another risk. So, that speed and access and ability to sort of start using the product and service is definitely a key difference. I think in banks, obviously depending on the area, but those that onboarding process is longer. It's typically done in person, and then you have sort of an in-person meeting sort of annually, depending on the risk profile of the customer. So that's the key difference. I would say that fintechs are using technology in a way that the banks don't and may not be able to. So, the fact that onboarding is done remotely and digitally means that technology is now being used in ways that it never has been before. So there are things like liveliness checks, there's biometrics checks, all these sorts of additional checks that are now done to ensure that remote and non-face-to-face onboarding is as robust as in-person onboarding. Onboarding is sort of one aspect. Collecting data in terms of how your customers are using your products and your platform in order to build a more holistic view of your client profile, so that you can then identify where there are deviations from their expected activity. Is something that I see fintechs do very well. They're able to partner with vendors that have deep expertise in this area and have built products and tools that can be plugged in, and the tech companies can leverage that sort of that functionality. Banks tend to be a little more hampered by the fact that they have such disparate systems and controls that are largely a result of the fact that they have just sort of pieced together the technology infrastructure over decades. It means sort of having these new and robust regtech tools that can really streamline some of these controls is challenging. That being said, tech companies face the challenge that they are trying to operate in a space that doesn't always neatly fall within regulatory requirements, right? So regulations and regulators are very familiar with banks, and a lot of the regulations are crafted with banks and banks products and services and processes in mind. Whereas fintech companies are always looking at sort of new and innovative ways of doing things that are quicker and more frictionless. And as such, it is often like trying to put a square peg into a round hole and trying to sort of really think about, well, how can we apply that regulation in this space? Which is why I sort of always double down on the point that it isn't just about meeting regulatory requirements. It's really thinking about what is the essence of the risk and how can we think about that when we think about our product and service.
Got it. Yeah, I think that's a really good point for all of the banks and fintech folks on this call. I think, trying to navigate the compliance space can be challenging, especially when there aren't rules that specifically explicitly apply to what you're doing. So
yeah, and something else that I'm I've worked with a range of fintechs from sort of startup, and currently I'm working with sort of an early a pre-MVP tech company, and it's very I think the thing that I realized quite quickly when I started working with tech companies is how hyper focused they are on the customer experience, and therefore every control you put in place is always thought of with that in mind. So what does this mean from a cost, customer, and risk perspective? Whereas when I worked in banking, you feel very removed from the customer in that way, and so you're very much sort of focused on, well, what is the organization's risk appetite, and what is the regulatory requirements, which was the two kind of things that you thought about. Whereas I really enjoy this kind of constant shifting and balancing of how commercial is our product, what will our customers feel, what will this mean from a friction perspective, and how we sort of thinking about how we can build those controls in order to balance all that.
Yeah, for sure. Payal, I want to go back, maybe thinking a little bit more about financial crime, and actually diving in a little bit deeper on cryptocurrency. I think lots of folks talk about tons of opportunities with crypto, but also lots of risks in relation to financial crime. So my question for you, as someone who's not, doesn't have a ton of experience in the space, is this just noise, or do banks and fintechs really need to be taking the crypto financial crime threat seriously?
So my view is yes, that it should be taken seriously, and I think more so now than ever. And the reason for that is I see a material shift happening now from cryptocurrency being this sort of complicated space that only a small handful of tech people understand, and then into sort of a place where purely institutional investors would operate in order to make money, to now moving mainstream, to now having more and more people use it as part of their day-to-day life. So recently we had things like PayPal announce that you could actually use it on their platform. We're seeing more and more companies emerge that are allowing you to transfer your cryptocurrency onto a card, which you can then use to go buy, coffee, etc. And that shift into mainstream adoption is where I think we're going to start seeing more and more sort of focus, as we are from a regulatory perspective, around this is now becoming something that we're going to see more use cases, more new and emerging typologies. The very nature of digital currency, in terms of the speed at which you can convert fiat to crypto, the speed at which it can move across borders, means that it's a real high risk. And as such, really thinking through what controls can be put in place is key. And really thinking about sort of what do these typologies look like, and how can we ensure that we've got adequate screening in place, that we're doing the right type of monitoring on the wallets. I think part of the challenge is that because it's such a new space, we're seeing regulators learn as the space evolves, right? So the regulations have not kept up with the pace of innovation in that space, and as such, it's very much a case of working closely with the regulators, really having these international bodies such as FATF think through what do individual markets need to be thinking about when permitting cryptocurrency within those specific markets. What we're seeing is also, different countries taking different approaches. There are certain markets in Asia where, you would probably classify it as pro cryptocurrency, and other markets where they're, still incredibly weary. And as such, we're not seeing a uniform and consistent risk appetite globally around this either. So I think it presents a lot of challenges, but just a super exciting space, and I think one that we're going to see evolve quite rapidly over the next 3 to 5 years.
Yeah, absolutely. And I do want to talk a little bit about what's happening now with COVID and looking forward. But just want a quick side note to the audience. If you have any questions, we're going to get to the audience question segment soon. So if you have any questions, please do type them in the Q&A box. Otherwise, I'll just keep talking to Payal I could talk to you about this for ages. It's so fascinating. But let's I guess talk about COVID, right? I mean, I think the impact of COVID on financial crime is fascinating. Though most of us have been under lockdown for months. Things have been slowing down for many businesses, but it sounds like for financial criminals, that's not exactly the case. So I guess in your view, like what has COVID done to and for financial criminals? And can you maybe give some examples of some of the maybe new types of threats you're seeing today versus what you saw before?
Yeah, so I think what we're seeing is a lot of, as more and more people are online, we're seeing more, we're seeing hacks. So a lot of cybersecurity threats. So recently, KuCoin in Singapore announced sort of a hack of its exchange, and a volume of its cryptocurrency was stolen. We're seeing a lot more fraud. We're seeing a lot of sort of phishing emails, those types of scams where people are encouraged to go onto websites, share their details. Regularly, we're seeing things like people being asked to disclose their bank details, etc. So we're seeing a lot of online fraud. And yeah, you're right. So COVID hasn't in any which way slowed down the activity of criminals. In fact, I think it's just given them sort of more use cases now to sort of leverage during this time.
Yeah. And I guess, are you seeing new use cases, or is it just more of like pre-COVID use cases?
Yeah, I think it's more pre-COVID cases. So, and just heightened levels of fraud during this time. So yeah. Got it.
And so then as a compliance, someone working in compliance, like what does that mean for the compliance officers listening? What I assume their job is getting harder, but what do they need to be on the lookout for right now?
Yeah, so I think I wouldn't really sort of think about it in isolation of where we are at the moment. I think really ensuring that you have a robust monitoring program in place. And so for those that aren't too familiar with sort of what monitoring entails, it really involves looking at your client activity on your platform. So looking at what your customers are doing, looking at, spikes in behavior, certain activity at certain times that you wouldn't expect, clients that are transacting in volumes and values in geographies that you wouldn't normally expect. And really thinking about, does this look normal? Does this look right? Having rules in place is one thing, but having sort of an iterative process, which means that you're constantly looking and reevaluating and really thinking about, what are these new and emerging threats and how are they manifesting themselves on our platform, is vital, not only now, but as we continue to see more of a shift towards people using these digital products and services. Having that sort of, I think people see compliance or financial crime is more just sort of onboarding. Well, we've got their passport and we know who they are and that's our job done. Well, actually, I see onboarding as being the smallest part of the overall financial crime program. It gives you an initial view of who your customer is, but actually what is more telling is the ongoing profile that you build of your customer that is really telling of sort of who they are and what their risk profile is.
Got it. Understand. So I guess, are there any particular skill sets then that compliance officers need to build at this point to actually be able to keep up with those threats and to be able to identify them earlier?
Sorry, can you repeat that question? Cut up.
I guess, what sort of skills do compliance officers need to be building to actually, identify some of these threats and keep up these like new challenges?
Yeah, well, I would say join the FFE that we manage. A shameless plug there, but I'll take it anyway. Because I think what is really important, especially in the tech space, is I think the community sharing sort of what they've seen on their platform, so that other organizations that are working in, say, the remittance space or the crypto space, etc., can really take that information and say, have we seen this? Have we got a control in place actually that means that whilst we're not seeing it now, maybe we will see it, because if X company is seeing it and they're operating in a similar space, we should have a control in place. And so, yes, of course, now's a time where everyone can sort of do a virtual training course, etc. But I think the main way in which the community can, really work together is through sharing of this information. I mean, ultimately, it can't be just one organization that manages to have all the controls and all the knowledge that will enable us to actually, try and mitigate some of these risks. It'll really be about the community talking and sharing some of their learnings.
Got it. Yeah, I think that's, and it sounds like it's not just within like the financial crime community. It sounds like it's across fintech verticals, being able to talk to each other and actually see like where are there similar threats you're seeing across verticals.
Absolutely, and I won't sort of discredit this idea of public-private partnership. I think regulators also being open and willing to meet with representatives of the fintech community is important. I would say we are fortunate here in Singapore that MAS is one of the few regulators, I think, that has a really great dialogue with the tech community. They're always open to discussion and learning. I would say that, the regulatory approach is quite stringent here. It is quite risk averse, but there is real appetite for dialogue and learning. And I absolutely think that those of us that work in this space should leverage that.
Yeah, absolutely. I want to go back to something you said a little earlier around regtech, actually. And so wanting to understand, what is the role of AI and machine learning and other sorts of these newer technologies in compliance, identifying financial criminals? What is the role of that? Do you think it's just a bunch of, regtech is like, a sexy word that we like to throw around? Is it real? Like, do you think it's as impactful as, creating like a compliance community that you just mentioned?
Yeah, so particularly sort of here in Singapore, and in Hong Kong and other countries within the region, we're hearing regulators really endorse the use of technology in this space, in the compliance space. So really using data in an informed way to make risk-based decisions. And I think that's right. And I think where fintech companies definitely have the edge over banks is their quality and use of data is very good, because they're newer. They have, they have typically good quality data that they can then plug into a system that can then, hopefully give them meaningful information out. I would say, I'm trying to think of a diplomatic way to put this, but ultimately, whilst I think there is absolutely a place for regtech, and I work with, and I've seen incredible solutions offered. Ultimately, if you don't have compliance expertise in-house that can take that solution, take the rules or the service that they provide and apply it to your business, it's a bit like rubbish in, rubbish out. You put data in the wrong rules, and you're going to get the wrong information out. It's also important to know that regulators globally, whilst they seem to be endorsing the use of regtech more and more, they are also at pains to be clear that the onus of the risk and risk mitigation still sits with the company themselves. So sometimes what I see happen is companies will go with a vendor and will say, okay, well, that control sits with them. That's great. Now we can carry on with our business. Well, that's not actually how it works. You need to have a very granular understanding of what that vendor is doing for you. How are they doing it? I would also encourage ongoing evaluation of how their systems and controls are working, so that you can then go and have that detailed dialogue with the regulators. You can say how and why you've selected that vendor, why you've chosen to partner with them, why they have the expertise to mitigate the risks in your business. So I definitely think there is a space for regtechs. I would say the role of the compliance officer now should be overseeing the control program if it's been outsourced. So, you know, I think slowly but surely we're going to see a shift away, particularly in banks, from these large teams that go and do a lot of manual lifting, and a lot of that manual lifting, rightly so, now being done by these tech solutions. But what you are going to need are experts that can really test how robust is that solution. You know, what to our earlier point, what are the new and emerging risks that we're seeing that actually now we need to translate into a rule, and we need to speak to our vendor, or we need to develop a rule in-house so that we're, you know, addressing that. And I think that's right. I think for people that want to work in compliance, that's a more interesting space to work in by far. You know, I don't think anyone enjoys just sitting there and you know, checking passports and utility bills, right? What's really interesting is thinking about, you know, what are these risks, and you know, have we got the right controls in place?
Got it. So I guess we definitely, it's not that the compliance industry or compliance officers are going anywhere. It's that they're, to me, it sounds like they're going to be overseeing the process, creating more of the strategy around, you know, fighting financial crime, and then the machines might actually be the ones like sorting through the data.
Yeah. Well, that's the hope. That's you know, and then, like I said, I think. I think that makes for a more interesting role. And so you know, when people talk about, and I've had this question quite a few times about, you know, do you feel like the roles of compliance officers will exist, you know, in the future, or, you know, my view is I think the roles will exist. I think they'll be far more interesting. I don't know that there'll be as many as there are now, and I don't think that's necessarily a bad thing either. But yeah, I think it's a really exciting space to work in.
Absolutely. Well, we're almost out of time, Payal, and I haven't seen questions from the audience. So I'm going to end on my favorite question, which is, you know, what are you most excited about in compliance, and what scares you?
Ooh. What am I most excited about? I'm most excited about continuing to work with new fintechs. I find it very exciting working with founders of early stage startups. I like the hustle and I guess the pace of working with early stage startups. So I'm excited about that. I'm excited also to see how the regulatory framework in Singapore in particular evolves. So we had the Payment Services Act come into force earlier this year. It's a new act, and with any sort of new regulation, you have a number of challenges around implementation, especially one that has tried to capture payment services at this scale. And I'm interested to see how, if and how the regulations change as a result of consultation, how many applicants receive their license, particularly crypto exchanges, digital banks, who emerges as winners in that space, what products and services are they going to offer, what are their differentiators. So I think next year will be a really exciting year, particularly here in Singapore. What scares me? You know, I think for me, if we're not able to travel, I think the non-face-to-face nature, if I'm being honest, in terms of the way I work, the way I engage with clients, not necessarily scares me, but it's something that I'm not particularly looking forward to. I really enjoy, one of the parts of my job that I really enjoy, and I enjoyed it when I was at Standard Chartered, is really going and meeting with my clients on site in country. So prior to lockdown, I was traveling across the region, and I really enjoyed the immersive experience of being somewhere, really understanding on the ground how things work, how are things done. And I think it gives me a real sense of, you know, some of the challenges, and, you know, having some of that dialogue in person. You don't build that rapport or that relationship remotely, I don't think. And so yeah, I hope that, you know, we find a way to make that shift at some point. It does feel like quite some time before that will happen, but yeah, I definitely hope that we can move to that at some point.
Yes, absolutely. I also have the travel bug and I'm itching to get out of Singapore. So fingers crossed for that. But Payal, that is all the time we have for today. So big thank you to you for being here with us. Thank you to our audience. And again, thank you to Brankas and APIX for sponsoring us. Thanks for joining the Green Room, and we will talk to you again next time. See you soon.
Thank you so much. Bye.
Thanks, everyone. Bye.